All right, we are back for another Friday Financial Wrap-Up with Mr. Michael Zuber. How are you, Michael?
Man, I'm doing so well. I look forward to these. Kind of the last thing I do before I take off into the weekend. And this weekend's a big weekend for me. Of course, this is my marathon weekend, Sunday morning, bright and early. I actually got to get on a bus at like 3:15, which means I got to wake up at like 2 a.m. for a 6 a.m. start. Lots of crazy stuff. And don't forget, Sunday's daylight savings time, so I lose an hour. Oh, they're going to make this marathon rough for me. But, yep, Sunday morning, we're running a marathon. Should be fun.
I know you're ready, so I know you've been training hard for it. So let's get right into the show. This is for November 1st, 2024. Hard to believe it. We're already in November. Claudia Psalm, you had an interview with her this week. Who is she? What is the Psalm rule? Tie this all together, please.
Yeah, so Claudia Psalm is the creator of the Psalm rule. We've actually talked about the Psalm rule a bunch about 3 months ago when the Psalm rule triggered. Again, the Psalm rule is basically an indicator from the lowest unemployment rate to the 3-month average. If it goes over 0.5%, bingo, bango, a recession triggered. And it did like 3 months ago or something like that. And Claudia Psalm made her name on that indicator or trend or theory. And then she came out very quickly after it triggered and said, hey, guys, hold on. I think the Psalm rule might be broken. We have some pretty unique things going on in the economy. So I've been communicating with Claudia via X or Twitter, and I asked her to be on the show about a week or two ago, and she agreed. So we did an hour conversation. We opened with the Psalm rule. We talked about how she set it up. Then we went into why she thought it might be broken, why she thought it was broken. We talked about unemployment rate. We talked about how can the average American look at the job market and stay abreast. Is it the weekly? Is it the monthly? We talked about why mortgage rates spiked. I actually presented my theory, and she's like, that makes a lot of sense to me. So that made me feel good. We talked about her predictions for the Fed rate cuts. And the thing you got to know about Claudia Psalm is she was one of the 9%. Only 9% of Fed analysts or Fed experts thought we would get a 50 basis points. And she was certain, right? She was on Bloomberg and CNBC saying, we're going to get 50, guys. You're not paying attention. And she was right. So again, she's very good at what she does. And she basically closed with her prediction. She basically told us she expects a 1/4 point cut at the next 4 meetings, and then they're done. So in her opinion, we're going to go from 4 3/4 to 3 3/4. We'll be at or near neutral. And then we see what happens. And she, of course, caveated that with all kinds of, hey, the job market, inflation, all of this. But yeah, her opinion is we got 4 rate cuts coming in succession. And I think we should listen. I think Claudia Psalm is one of those experts that hopefully we can get on the channel some more. And we can just keep learning from her. So I had a great time. I got better. Hopefully the audience got better.
Man, that's a big deal. I mean, she's on CNBC, Bloomberg. And now of course, she recognizes game. She's on one rental at a time. So she's smart for coming on.
Well, let's see if she comes back.
You're going to get her back. You can have anybody here. Okay, let's keep going. Let's talk about pending home sales. What happened with pending home sales?
So pending home sales popped like 7.5% up. Monster. But let's remember, these are pendings, not closings. Let's remember that 3 short weeks ago, we had mortgage rates in the low 6s. So where are we today? We're not there. So there will be no follow through. We will not get another great pending home sales. The refi boom is dead and buried. This little blip in pending home sales or activity is dead and buried. But we did learn something. I think we have further validation that 30-year mortgage rates below 6.25, probably approaching 6, unleashes demand. That's what we learned with pending home sales.
Okay.
Right? We got to sub 6.25. We got as low as 6.11, and demand came back.
Yep.
That is a lesson we should follow. If you're a flipper, watch that. If you're a home buyer, watch that. If you're an investor, watch that. And again, where we're at today is we're at 7. They're likely going up from here because the 10-year note's up again this morning. So we're definitely, there's no question, Ty, we're in a buyer's market. There's absolutely no question. Now, you may be in some cities or locales where that's not true, But nationally speaking, we are in a buyer's market. Days on market up, inventory up. Just man, it's right or wrong, indifferent. Don't hate the player, hate the game. Investors are going to win in this environment because we're patient, we're disciplined, we only write great offers, we can follow up. It's the time for creative financing. If we have rates above 7% for all of 2025, I suspect, Ty, most of 2025 will be a buyer's market, which would be wild to think about.
Yeah, that's I literally having the same conversation with my coaching groups, with the realtors, the hybrid realtors that I talk to every week. Same conversation. I'm going to come back to a big question about post-election. Don't answer it now. I'll save it for the end. But do you think there's some demand that may loosen up after we get past next week, once we get some certainty about the election? Save that answer for the end, though. Let's keep going on the show notes. PCE, what is it? What happened?
Yeah, so we got our third inflation reading. Remember, we get CPI and PPI early in the month, PCE at the end. Again, just like all inflation's reading, we have headline and core. Headline did come down. It's now 2.1. That's really close to the Fed's target.
Yep.
PCE core did not move. It was expected to come down, and it didn't. PCE core hasn't moved in 6 months. I mean, think about that. Not up or down. It's been flat for 6 months. So, depending on how you want to look at it, glass half full, glass half empty, core is still a problem. And a lot of that is shelter. And hopefully we've killed that by now. We've talked about shelter and why it's such a horrible, it has no recency bias. It's a 12-month lagging, frankly, piece of junk, but it is what it is. PCE core came in at 2.7, I think. So again, flat, did not go down.
Interesting. Let's talk about, I have in the show notes job numbers, but I also know that we're going to talk about tomorrow. Mm-hmm. We're recording this on Thursday on Halloween. What happened with job numbers and what happens on Friday?
Yeah. So this week we get 4 jobs numbers. As of this morning, we have 3 of the 4. So we'll go through them quickly. So first off was the JOLTS report on Tuesday. Expectations were for about 8 million job openings. It missed badly. It came in at roughly 7.5 million. So not a good sign, right? Less job openings. Then we got the ADP report, which is private payrolls. It blew out the number, right? It came in at something like 230 on a 150 or something. So it was higher than expected, again, showing a strong jobs market. Then on Thursday, this morning, we got the weekly unemployment claims. And again, remember just 3-4 weeks ago, we had a yellow flag saying, hey, 255, this could be a problem. It could be the start of something. We don't have to worry about that anymore. Every week thereafter, it's been coming down. This morning, it posted like a 216 or something, or 218. Again, even below trend, right? We've been bouncing around 230. Yep. And this week it came in at, I think it was 218, something like that. So again, we can take that yellow flag, throw it away. We're in a good spot. So all of this to be said that Friday morning's number is the coup de grace. It is the most important. It will be market moving. Expectations are for about 100,000 jobs created. It is expected that the unemployment rate stays stable at 4.1. I am here to tell you that I expect the unemployment rate to tick up. So I'm going to call 4.2, and the experts are calling 4.1 again. And I'm going to take the under. I think I think it's going to be messy. And then finally, Claudia Somm, not to go back to that, but she did make a call. I asked her to take the over under, and she too took the under. She thinks it's going to be a pretty messy number with 2 hurricanes, the Boeing strike, things of that nature. So buckle up. Friday could be interesting.
Very, very, very interesting. So let's keep marching down the field. The 10-year note, what is it? What's the significance? What did you see this week?
Yeah, the 10-year note, again, is the longer the duration. It's really where mortgage rates, 30-year mortgage rates are anchored. It is obviously the thing that has exploded higher, once the Fed cut, which again is still blowing people's minds. Right. As Claudia Somm, we talked about this. We talked about why mortgage rates are going up. You got to check out that interview with Claudia Somm. And if you're on my channel, you know that for about all week, I've been proposing my logic or my reasoning for why the 10-year note has gone up and why mortgage rates have gone up. And I shared it with Claudia Somm. I'm like, hey, I'm just a guy with a degree that's been looking at the economy for 30 years, but this is what I think's happening. And she basically agreed. And basically what that is the market, the smart money, the bond market is lowering the odds of a recession.
Interesting.
Right. She went as far as to say, yeah, if you go back to the Fed meeting, the data coming up to the Fed meeting was weak and scared the Fed. The data that came in after their 50 basis point cut was like stronger than expected. So yeah, I really do think the 10-year note is the smart money saying no recession.
Interesting.
And if we have no recession, then there's no reason for the Fed to cut back to zero. So we are going to have higher rates for longer. And again, I'm imploring you folks to plan on having mortgage rates at 7% for all year. 7% mortgage rates, it depends on how you look at it. Does it suck or is it great? You can look at it any way you want. And there's going to be winners and losers. And it's just where it is. Again, the housing market is broken. And I've been telling you for years, the only way to fix it is time. And we're just in that comfortable space. And this isn't in the show notes, but I'll go here as well. D.R. Horton, big home builder, one of the big nationals, came out this week. Very disappointing earnings, missed across the board. But they did highlight that the inventory that is moving is smaller homes, attached homes. And if you've been watching anything I've been putting out there, my hope, my belief, I'm praying that more home builders build entry-level housing.
Yep.
I have said publicly that I hope the average square foot of a new build falls 10, 15%. There's only one way out of this, folks. It's more inventory that can be bought by first-time home buyers, and time. It just is where we are. So, let's see where we go.
Now, let me ask you, what happens if mortgage rates at 7% all year? Is that realistic?
Yeah, I think so.
Is there a range? Let's talk about this. This was not show notes. So what happens if mortgage rates are 7% all year? Then also kind of what do you see as the range? Like what?
Well, so I'll do the range and then I'll answer the other. So when I say 7, I think it's like 6.8 to like 7.2. That range. So it could have a 6 on it, but a high 6, low 7. So what happens? Well, first off, Lawrence Yun, chief economist of NAR, a very famous economist, he is out saying, I read it this morning, we're gonna do 4.6 million existing home sales in 2025 and 5 million in 2026. If we have 7% interest rates, no chance.
Yeah,
Zero chance.
Where's
Zero.
he pulling that number? That was 3 months ago, right?
I don't know. This is a report I read. It could have been an old quote, but there's 0% chance we get 7. If we have 6.1, yeah, maybe, right? We have a 6, maybe, right? Okay. That's where you have to go. So again, interest rates matter. We've learned that. Again, go back and look at pending home sales. We know with certainty demand unlocks below 6.25.
Okay.
We're not at 6.25. We're closer to 7.25, which demand falls off very quickly. So transaction is the first thing you're going to see. Yep. The transaction crash, I think, even goes lower. If we have 7% mortgage rates all year, there's a chance we do 3.6 or 3.7 million units. And I think we're going to do like 3.9 this year. So it'll be another down year, which is going to suck. Hopefully we'll be the bottom. But that would be the first thing. Second, home builders, new home sales. New home sales so shockingly win. Because if you're selling less existing home sales, new homes look better. Yeah. And then if builders get really smart and build smaller homes, they win. Do you know who is not selling homes with a 7% mortgage rates? Big home builders.
Right.
They're selling with a 5. And some of them have a 4. I even saw one home builder had a 3 in Colorado somewhere. Wow. Again, home builders can buy these things down. So again, existing home sales tank, new home sales, assuming builders pivot to smaller, could actually have an okay year. They're going to eat margin, no doubt, but they'll still be wildly profitable. given the margins that they're having today. Home sellers lose. First-time home buyers lose. Flippers lose. Long-term buy and hold who do the work, write offers, follow up, crush it. Crush it. Creative financing, lower prices. You know, we don't have to buy, which is why we have so much flexibility. But there's only a couple of winners at 7% mortgage rates. It's national new home builders. You have to have a balance sheet. You have to have a mortgage arm to make this work, and investors who do the work. Everybody else, 7% mortgage rates, tough year.
Yeah, pretty wild. Very, very wild. And so if we look at like, okay, my question that I said I was going to save toward the end, do you see post-election, right? Because that was part of it. And that even KCM, Keeping Current Matters, a lot of economists, a lot of NAR people, a lot of people think, even like I saw Tom Ferry, which you and I both love.
Yep.
We love Tom, respect the heck out of Tom.
Absolutely.
Talking about like there's a pinned up demand because of the election, and that maybe do we see just maybe not so much in December, but maybe January, this boom of activity. What do you see post-election? Is there anything that we see that unlocks because of post-election or post-New Year?
Yeah, so for the longest time, I've been saying the election matters, and a lot of things in the economy are like, I'm going to wait. Challenger and Christmas says people aren't hiring because of it. Again, to go back to D.R. Horton, I think D.R. Horton's CEO, might have been the CFO, said it best. They talked about the election a little bit, but what they really said, given where rates are today, is buyers are pulling back because they expect lower rates in 2025.
Interesting.
So I believe that to be true. I believe, right or wrong, the home buyers have been taught low 6 is good, 7 bad. I believe, given the demand spike we saw with pending home sales this month, that's because again, consumers are remarkably predictable if you watch them. And again, I think what we've learned, mortgage rates below 6.25 unlocks meaningful marginal demand. 7% shuts it off. Will the election uncertainty behind us help some? Yes. But what will help most? 6.25 and below.
That's it. Okay. Very interesting. Very interesting. Anything on the jobs market? Anything else on jobs for Friday? Anything else that you maybe to watch for? Or?
Yeah, 100K is the number. I think I actually, Claudia saw him again. She sent out a tweet the other day and said, anybody brave enough to call a negative number? I actually raised my hand and I said negative 25,000. I think this dirty number with 2 hurricanes, Boeing strike, actually might produce a negative number, which would really shock the market.
Nobody's talking about that either, by the way. And I hadn't thought about the hurricanes and then the Boeing thing, because the Boeing thing's huge and the hurricanes, how could that not be huge? So let's talk about opportunity, Michael. Michael, in all of this, what some people would perception is everything, as bad news.
If you're an investor, I mean, buyer's markets is where we win. Buyer's markets don't happen very often. They are typically short-lived. Buyer's markets are rising demand, or rising supply, lower demand. Days on market go up. Price cuts happen more. It's, if you're an investor and you've been waiting for a buyer's market, you certainly have one for the next couple of months. If we have rates at 7% in February, it's going to be extended. The longer rates stay at 7%, the longer the buyer's market. Just plain and simple.
Got it. Yeah, spot on. I think so too. Lots of opportunity for seller finance. Not enough people are talking about it. Talk about what's going on in Vegas, February, the February event, Michael. Tell them what's going on. How can they get involved? How can they get themselves there?
Yeah, you can do me a favor. Just go to Eventbrite, search One Rental at a Time. You'll see the opportunity to buy tickets to a 2-day event full of millionaires giving questions, networking. Again, every presentation will be about half presentation and then half Q&A from the audience. really do events different. 6 hours of networking. You're going to be fed 2 lunches and a dinner. We're going to go 12 hours on Saturday, 9 hours on Sunday to maximize your event. You will be able to travel home on Monday because it's a long weekend. I do that on purpose. It's a location called the Blind Center. So we're helping the visually impaired of Clark County by renting their facility on the weekend. It's off strip. So we don't lose anybody, right? So you can take an Uber or drive there, and you don't get distracted by casinos and the thing. So you definitely are locked in all day. You're going to get to meet a lot of the people that come on the channel. You're going to get to meet the people that are in the comments. It is a lot of fun, great networking. You'll make friends for life. That's the goal. And you will get all of your questions answered. And again, if you are a couple, both of you should come, because we're going to have presentations from couples leading off day 1, day 2. You're going to have a lot of couples in the audience, husband, wife, boyfriend, girlfriend, whatever the combination is. So I look forward to it. Yeah, we've sold over 100 tickets now. VIP is half sold out. And I look forward to it.
I'm going to twist your arm here. This is for November. Part of November is we get into this Black Friday season. So this is a Friday show. Why would we not have a Black Friday special? We did not rehearse this. We didn't talk about this before today. Michael, what can you do extra? I want to see some extra for some people, a bonus, not a discount. I know you won't discount the tickets. What can you do as a bonus or an extra just for people on today's show?
I don't put stuff on sale. I mean, I'm very clear about that because I like people to buy early and have confidence in that. I don't do discounts, but
you got to do something.
Well, yeah, I'm just thinking about I get it. And I'm cool with that. You and I are boys. I'll do something for this weekend and this weekend only. So Friday, Saturday, Sunday. I'm running a marathon this weekend. First time I'm doing something. So I'll offer this up. Anybody who buys a ticket Friday, Saturday, Sunday, I will mail you an autographed copy of One Rental at a Time. I have a shelf full of them. So again, the tickets are what the tickets are. And this will be for general admission or VIP. You can buy either one. I will send you an autographed copy of One Rental at a Time.
Folks, buy your tickets, get your autograph book. One last thing, school community, $20.
Yep.
SKOOL, One Rental at a Time, $20. I'm going to throw in a Black Friday special that I will do 2, not 1, but I will do 2 bonus Zooms. We'll do them like Sunday morning. That was super fun. Where we do, and the theme when I do them, I'll do bonus Zooms for the school community. Anybody who joins, it'll be available for everybody in the community. But get yourself in there. I'm going to specialize. What I specialize in is creative finance, seller finance, specifically in this 7% environment. How do you go out and get no interest? Like, how do you get a 2-3%? You can still go out and get a 2-3% mortgage. Why? Because I'm going to teach you in the school community. If you're a part of that community, we'll do special Zooms. I'll do 2 special Zooms in the month of November, Michael.
Wow. Thank you. That's such a commitment. I appreciate you doing that for us. It's you're just a go-giver, man. Thanks for being a leader.
Any closing words for this show?
Folks, 2 months left in the year. We are in a buyer's market. This is the time investors win. Enjoy, but you got to do the work. It's never easy. Do the work, lots of offers, lots of follow-up, but the opportunities are there, and you layer in creative financing. How could you not win? It's going to be pretty cool.
A lot of opportunity for those of you that take action. Thank you, Michael, for all you do. Have a great marathon. Have a great weekend. Take care.